Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is July 25th, 2025. I am Nova.
I am Satoshi.
Okay, let's kick off with the market picture. We saw a bit of a pullback, didn't we? Bitcoin touched $120,000 briefly, then settled around 116K. So down about 2.5%. Ether near $3,620, down just under 1%.
Right, and what's really fascinating here, I think, is while the majors dipped modestly, those riskier meme coins, they took a much sharper hit. You know, Dogecoin down over 7%, Shiba Inu around 4%, and then things like Bonk and WA plunging like 6 to 12%.
Wow, okay. Big difference there.
Exactly. But despite this, trading volumes are still pretty strong. We haven't seen like real panic selling. So the mood feels guarded. It's a mix. Positive signals like more stablecoin liquidity coming in, which often hints at buying power, right?
Yeah.
But then you've got unsettling stuff like that exchange hack we saw.
So putting that together, major tokens dip slightly, meme coins fall harder, volumes hold up. What's the underlying psychology? Is it just profit taking or something more?
I'd say it leans more towards strategic de-risking, you know, moving towards quality maybe. People are taking profits off the really speculative stuff, but they're not just like running for the exits on crypto altogether. They're staying engaged.
Okay, that makes sense. And this caution isn't just happening in a vacuum, right? Let's bring in the bigger picture, the global economy.
Exactly. Global economics definitely threw some new things into the mix, especially from Europe. The European Central Bank unexpectedly paused its rate easing, kept the benchmark rate at 2.0%.
Right.
So that signals slightly tighter financial conditions globally. Crypto didn't react hugely, though. Seemed mostly priced in.
Okay, but shifting over to the U.S., this is pretty interesting. Former President Trump openly pressuring Fed Chair Powell for big rate cuts. Talking about getting rates down to, what, around 1%? That's quite a statement.
Yeah, it is. And this raises a big question, like, what are the implications for you, the listener? Now, the Fed's still expected to hold steady for now, but this definitely injects more uncertainty about future U.S. monetary policy. And interestingly for crypto, it kind of reinforces that narrative, you know, Bitcoin as maybe a hedge against political interference in central banking.
And still on policy, the White House confirmed that 180-day report on digital assets. It's coming July 30th. Lots of anticipation there, hope for clear rules, but also, you know, the risk of tougher regulations on stablecoins or DeFi.
Definitely one to watch. Now, beyond the macro stuff, there were some specific crypto events in the last day or so, like Tether minting another $2 billion USDT. They called it inventory replenishment.
Inventory replenishment, yeah. So basically more digital dollars.
Exactly. Brings their supply to a new all-time high. And historically, these large Tether mints can sometimes come before crypto rallies. Hints at capital potentially coming in.
Okay, so that's a potential positive. But then on the risk side, FWOX, that exchange.
Yeah, unfortunately. A mid-sized exchange hit by a $14 million security breach. They had to halt withdrawals temporarily. They did say affected users will be compensated, which is crucial.
That's good, but still.
Oh, absolutely. It's a stark reminder about cybersecurity, you know, custodial risk. That old saying, not your keys, not your coins. If your crypto's on an exchange, you don't really control it directly. It highlights why self-custody matters for, like, true ownership.
Definitely.
And maybe the most intriguing thing, this long dormant Bitcoin whale wallet, holding almost 4,000 Bitcoin, worth nearly $500 million, moved its coins after 14 years.
14 years, wow.
These coins were bought back in 2011 when Bitcoin was like 30 cents. That's a, what, 37 million% gain?
Yeah.
It's kind of mind-boggling.
Unbelievable, really. So did they cash out?
Well, the transfer was to another unknown wallet. So it looks more like reorganization, maybe preparing for something rather than selling right now. But still, the sheer scale, the age, it adds this layer of intrigue, maybe caution. Makes you watch what these big old holders are doing.
Okay, so pulling all these threads together, the market dip, the policy moves, Tether minting, the hack, this ancient whale, what are the key takeaways for you listening?
Look, I think caution is probably sensible right now. The near-term direction feels pretty mixed. You've got bullish signs like the Tether mint, maybe future Fed, easing way down the line.
Yeah.
But those are balanced by real risks, hacks, regulatory surprises coming maybe. So probably best to avoid over-leveraging, keep things diversified, and definitely keep an eye on dates like that July 30th report. The market's digesting a lot. Expect some swings.
Yeah, staying informed on all these different fronts, liquidity, security, politics, even these whale movements, it seems absolutely crucial, doesn't it?
It really does. You see how global policy, these sudden market events, even mysterious old wallets, it all connects in this really complex way.
Absolutely. And maybe something for you to think about after this. How could just one policy report, maybe weeks or months after it lands, fundamentally change how you even interact with digital assets? It's a fascinating question in such a fast-moving space. That's your 5-minute deep dive for today. Enjoyed the brief? Please like and subscribe. We deliver fresh market updates, macro signals, and crypto news daily in just 5 minutes. Live streams coming soon. Stay tuned.